Invitae released some of the most impressive earnings of the season a few weeks ago. Cathie Wood said in March that Invitae was one of the most underappreciated stocks in our ARK Invest ETFs when the stock price was around $42. Invitae, like many other gene-related stocks, CRISP Therapeutics, Pacific Biosciences of California, blew up in 2020 with massive success, particularly for Cathie Wood's ETF, and have struggled in 2021. Despite being up on earnings, the share price has declined slightly, and they're now around $26, down from a yearly high of $56. Companies don't normally halve in 6 months on no news or limited news, and this was clearly a valuation issue. At the time, Invitae was priced above 40 times sales. It's now around 14 times sales, a lot more reasonable, but still not exactly cheap by conventional measures. So what does Invitae do? Invitae is the business leader in the business of genetic testing and is a market leader in the developing field of personalised genetic testing. Currently, it offers diagnostic or predictive testing for a variety of genetic diseases, and as the need for more personalised medicine grows and gene editing technologies become more widespread, the need for this testing will only grow and grow. The thesis of this movement, from one test for everyone to more personalised medicine, is exactly what Cathie Wood believes will happen. The most exciting element of this company is the sheer size of the opportunity here. Invitae sees its current total addressable market at $150 billion, and while this must be taken with a grain of salt, the TAM for this company really is huge. It splits this into 4 age groups, with the biggest opportunity clearly coming from ages 41 to above 65. When the company talks about its execution, they see themselves in the 3rd stage of its development, the first 2 being making genetic testing more affordable and more widespread, and building partnerships to help in that goal with other companies. It is now in the stage of acquiring other early stage companies to widen the offerings available, and crucially, it is already working on the 4th stage of its development, genetic data sharing by building a digital platform. So let's jump into the earnings. The company reported $116 million in revenue for the quarter, an increase of 152% year over year. This is on the back of a 154% increase in billable volume. The company also increased revenue guidance for the full year to $475 to $500 million. This is excellent and a show of clear accelerating growth for the company, which is the main reason the stock was up 10% on the news. The rub is the losses were larger than expected at $166 million. Now, this is to be expected for a company that is accelerating its growth like Invitae and really playing offense. The good thing is that the losses are decreasing over the same period last year, and the company has $1.5 billion in cash equivalents on the balance sheet, so it's got a long run rate with the current cash available. Of course, when you buy a company like this, you're paying 14 times sales because you believe in the long-term future of the company, and with a current TAM of $150 billion, or predicted TAM, that is really the key. If this is accurate, even 10% market share for Invitae would be an enormous $15 billion in annual revenue, which is roughly 30 times the company's current yearly guidance. Now, of course, this requires a degree of optimism, both to believe that the company is capable of executing and that the addressable market will actually mature into something of this size. I believe this is the way modern medicine is moving, towards increased use of genetic testing and gene editing as part of a larger move to more personalised medicine. As you can see on this chart here, the volume for these really wasn't affected by COVID that much, and volume is only increasing as is revenue. As you can see by the evolution of the platform, the oncology is a massive percentage of revenue and continues to be, even from 3 years ago. But crucially, women's health and rare diseases are roughly saying the same, with a massive growth in the platform. And that is what we'd really like to see, is the growth in this digital platform, which previously was a kind of unknown for Invitae. It's a new development. And what is great about the digital platform is it will be much higher margins than the current business, as they're kind of running the genetic testing business at low margins to get them more widespread, in the same way that like a razor and blades model for like intuitive surgical or something like that. So in summary, this is a huge opportunity, like a huge TAM, and even a small slice of that can make Invitae an enormous company. This is the way the world is going to move. I believe this will be a necessary service, and so does Cathie Wood, and so do the ARK Invest ETF is investing heavily in these genetic testing companies. This is an advancement that the world needs, And any trend like this, you want to see continued accelerating growth, and that's what we're seeing is triple-digit year-over-year growth. I think the best approach for anything like this is a basket approach, of course. Like Invitae is a great stock, and I believe it's a great company. I believe it'll go up and up. But a basket approach is the best when investing in these type of companies that are high price to sales companies. It's currently posting triple-digit year-over-year revenue growth, with growth margins only set to grow with the expansion of the company and the expansion of the platform. I believe this is the perfect time to invest in Invitae, and I'm investing quite heavily in it now. And when I first bought in around $40, exciting times for shareholders there.